Welcome back, everybody. Sive is here with the Forex Peace Army.com. Let's take a look again on euro currency. So, well, in general, everything goes as we discussed yesterday. Retracement that we talked about has happened based on the pattern that we discussed as well on the 4 time frame chart. Market stands precisely on the point that we talked about, and now we need to make the final decision whether we would like to take the position here or whether to wait and see what will happen. So, on the daily chart, from the overall point of view, it seems that points looks, and actually possessions looks interesting for entry. We have good impulse here, just has been stopped by the overbought area, and this is normal pullback. Trend remains bullish. So that's the first level that we considering for possible position taking. Why this level seems interesting? First of all, on the 4 time frame chart, you could see that in fact this performance was based on a double repo sell pattern, as we talked about. And if you remember, I said that either 30% or 1670 as 50%, because euro currency likes 50% levels most of all. 618, I said it's a bit deep. In this case, all the rally will be raised, which we do not want to get. If I plot here the moving average, you could see that it was clear double repo sell pattern, and its minimum target is already done. 1670 is the 50%, which is the minimum target of the double repo. Performance here was absolutely perfect. You can see close above the moving average below. Market has closed here above the 30% support. So 30% support was lower, and that's a necessary condition for the double repo pattern. Close above, close below, and it started. So actually this was definitely some kind of the fast reaction. Maybe on the Davos speech of the Donald Trump or something like this. But anyway, it was reversed really fast, which is typical for the double repo patterns, and market collapsed to the 50%. Now we're coming to the most interesting thing, what to do. So on hourly chart, we also see that the inner ABCD pattern for the double repo also is done. It's OP and 1670 area. That creates an agreement support. It's better for position taking and making decision, we need to check whether we have any reversal patterns around it. Currently we have good engulfing pattern, and I think, guys, that here situation stands so that it makes sense to take the risk in trying to take the position by the one reason. So here, as you can see, kind of the, I don't know, hand shoulders is forming something like this. First reason is you could place very tight stop, so you do not need to use some daily, weekly charts and so on, because you are based your trade only on the minor reversal pattern. So you could place your stop just below the OP, or even below the right arm. This is also possible. This will be just absolutely minimum stop order that you could apply. Because if here market will fail and drop, the next entry that we will consider, or even maybe we will consider no entries, just because in this case, if downward action will continue, it will go to the XOP, which is 1633, and it stands very close to 618, even slightly below this area. So it will be significant distance lower. From that standpoint of view, I do not see reasons to take the big risk, and current situation seems more or less attractive to consider. The one bad moment here with all this stuff is acceleration of the CD leg. You can see that the CD leg seems a bit fast compared to AB. This is not really good and decreases chance of the success here, so makes it a bit lower. But it's not always some determined factor, some major factor. So it makes sense, but it's not always when you see the acceleration market can't reverse here. So that's overall common thoughts on the current situation. You would decide by yourself, but really low potential risk, forming some pattern on intraday charts. It could bring some results. Other way, you could stay for lower retracement, but in this case, we should understand that we will get the erasing of all this stuff almost down to the bottom. Chance will stay on the market that we could get the reverse, but it will be harder for the market to show such kind of the reversal. So and here it seems a bit well, for the bulls, it's more acceptable level to reverse to keep the overall bullish context and bullish sentiment valid on the market. But as I said, final decision stands up to you. So I'm just sharing with you the overall thoughts that we have here with the detailed background that I see here. Think, decide, and as usual, see you tomorrow in the next update.